Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get you the headlines. Nifty and the Sensex drop 1% each. All large cap IT stocks decline.
Government plans to take legal action against the auditors of IL&FS Group. This after ICAI and SFIO found evidence to build a case.
Bharti Airtel sets up a committee to evaluate fundraising options, transfers part of its stake in Infratel to Nettle.
Aviation passenger traffic growth hits a 4-year low in November as higher fares discourage flyers.
All right, we'll get to all of that in a bit, but let's start with the markets. Neeraj is here with us as always.
Afternoon, Neera. Well, dull day, quite unlike what we've seen the last few days. Today we are in sync with what the global markets are doing, which is that we are down. In fact, we, for a brief period at the start of the trading day, bobbed into the green as well. But since then, it's been a downward journey of sorts, about 1% lower for all of the key benchmark indices, and the market breadth too. Maybe not terrible, but looking slightly weakish compared to the last few days. Save for the oil marketing companies and IOC, by virtue of being ex-dividend, maybe in the red, but BP and HP are in the green, and maybe if not ex-dividend, IOC too would have been in the green. So the oil marketing companies are probably the saving grace in terms of the Nifty gainers today. Aside of that, a bunch of stocks looking weak. Autos have been taken out, so the likes of Maruti, etc., are trading with a fair degree of red. Bharti Infratel, maybe the overhang of or the news flow yesterday, that stock is down about a couple of percentage points as well. And IT continues to sulk. Infosys at least continues to sulk, even if the rest of the IT pack might not be doing so, because Infosys is down another couple of percentage points in the session today. So not looking all that great. Reliance Industries, the heavyweight, down about 1.5% too. So that's the component, and which is why the market is under pressure. Some heavyweights are looking slightly weak. At the broader end of the spectrum, banks and NBFCs continue to, rather not continue to, but sulk a bit in trade today. Ujjivan may be an exception, Divan Housing may be an exception, but look at Shriram Transport Finance, TF Financial, IIFL Holdings, Federal Bank. The entire clutch of names is looking slightly wobbly in trade. Couple of exceptions to that rule, maybe Agro Finance and an Ujjivan, which was up about 10% yesterday, as I said, and now another couple of percentage points in today's session. But by and large, weakness is the name of the game.
Neeraj, thank you so much for that. That's the markets for you. The government is planning to take legal action against the auditors of IL&FS Group. Sources tell Bloomberg News that the Institute of Chartered Accountants of India and the Serious Fraud Investigation Office have found sufficient evidence to build a case, and the government may file a petition as soon as today. Shruti Srivastava from Bloomberg News now joins us with more details on what we know so far. Shruti, what do we know?
The Ministry of Corporate Affairs is moving a petition in the National Company Law Tribunals against the auditors of IL&FS Group after they have found the auditing lapses on their part. Now, the ground for the petition is from the government side is the evidences which have been found by the ICAI and SFIO against the auditors in these cases. Only a few days earlier this month, the government had moved a petition against the key managerial people of the company, of the group company, to attach their properties, and the senior people of the IL&FS were restrained from dealing in securities, and they had to disclose their movable and immovable properties. Now the case is yet to come up in the NCLT today for hearing, so we are waiting for more details to come from the court.
All right, thank you so much for that. Let's get to the big story of this week. The government is pumping in an additional 41,000 crore into state-owned banks. Essentially, over the next 3 months, they will be infusing 83,000 crore into these banks. The irony is that even with those large sums of money, it looks like banks will just about be able to meet regulatory capital requirements. Joining us for a conversation on PSU banks is Dhananjay Sinha, Head of Research, Economist and Strategist at MK Global Financial Services. Sir, thanks for joining us on this conversation. I want to start by taking you back to the conversation we had when that 2.11 lakh crore seemingly very large package was announced. I think at that time you spoke to us and you said that, this is grossly inadequate. The amount that you actually need is closer to double that. But, we are still within that ambit of 2.5 lakh crore. What is your sense of how adequate this will be, sir?
So I think from 2.11 to 2.5 is not a big difference. I think there is an addition of something like 23,000 crores or 24,000 crores additional that is coming on top of the initial target. So initial number that they came up with. So I don't think it really measure up to the requirement that is there. I think the key issue that that has been addressed out here is ailment that we have seen with respect to the PCA banks. So we have already seen that within the central board of RBI, the PCA was one topic that was being discussed. And I think with this recapitalization thing, additional recapitalization that they are talking about, it is likely that there will be a sort of an attempt by the government to move some of the PCA banks who are closer to the threshold to above the threshold, so that they can start lending more aggressively than before. And secondly, it would be focused on banks that are non-PCA banks who are likely to slip into PCA. So I think there will be a very very case-to-case kind of attempt that will be made of how to utilize this this additional or recapitalization thing that they are talking about. So I think that's what I consider as the objective. But overall, I would say it may be a small addition to the attempt they have already been making, but I think it doesn't really create much growth capital even for those banks that we are talking about with respect to PCA and non-PCA banks.
Dhananjay, will this capital infusion at least give some of these PCA banks enough muscle to go and raise money from the market?
See, the thing is that it depends on how are they trading. So the thing is, if they are trading below par to book, I think it is difficult. But I would say that the PSU banks who are above, who have adequate capital, who have healthy capital structure, they would go ahead and sort of raise money. I think that's what the government would also want the banks to do. But I think with respect to the PCA banks, I don't see that really happening. So that's what my take is. So we have sort of tried to look at which are the banks. So the objective is basically try enable them to go ahead and do more aggressive lending than what they have been doing as of now. So I guess the objective would be to ensure that these banks do MSME lending to construction, real estate, etc., where the government wants to push ahead of the upcoming election, so that more job opportunities get created, and the stress that we have seen across MSME sector, that is also addressed. And remember, I think there is also a sort of a attempt by, I think within the RBI discussion that we've had, that there is some demand with respect to restructuring the impaired asset of the MSME sector. So there is some amount of forbearances that is being talked about. So I think if you tie all these things together, that's where the objective lies.
So, just to broaden out the discussion, we've gone through 3 years of this cleanup. Various things have been done, PCA, etc., etc. How do you see the PSU bank segment now versus 2 years back? I think the government rightly pointed out yesterday in their presentation that there has been improvement. For instance, provision coverage ratios have improved, net NPAs have started to come down, recoveries, at least there are some recoveries, and slippages, incrementally have slowed down too. So if you compare PSU banks as an investment option today versus 2 years back, is there any favorable view?
So my short answer is no. So the thing is, even with the infusion that you are making today, I think you will be barely around the capital adequacy that you require. So you don't have scope to actually grow. I think they will be lending to MSME sector and other kinds of sector which are a priority of the government at this juncture. We'll have to see what it does to incremental slippages and credit risk. So that we'll have to see how they evolve over the next 6 to 12 months time. We'll have to see all that. I think it is true that there has been some improvement, but that has been the case across the sector. The credit growth has moved up from 5% to 15% or 16%. And I think even in the public sector bank, there is a certain amount of growth. But I think those are restricted to, I think PSU banks outside of PCA and all, they are growing roughly about 10% odd. So largely led by SBI and also those are the banks who have capital and ability to grow. But I think beyond select names, I would say most of the PSU banks will still not have enough capital And I think incremental lending, what is the slippage that comes around from there? I think positive side, two aspects are there. One is that the GSEC yield has actually fallen in this particular quarter, so that is a positive thing from a mark-to-market gains. So earlier on, these banks were actually showing losses because they have significant SLR holding or government securities holding on their book. So I think there was a negative impact on the profitability because of that. I think some of that could be reversing because of the change in yields. We have to see how it sustains. But as of now, in the last one quarter, it looks to be good. And there are certain resolutions, as you rightly pointed out, of impaired loans, which is also happening. But I think that process is somewhat slow, much slower than what was initially thought of.
Okay. If you reverse this around, sir, and look at it from the government's perspective, that's the other question I think is interesting right now. In 2015, very soon after they came into power, they laid out this whole roadmap via Gyan Sangams, no political interference, HR reforms, the setting up of the BBB, etc. Nearing their re-election, the re-election bid or the next election that's coming up, they've put in the money, 2.5 lakh crore, unprecedented, but nothing else has really happened. So this money has not really paid dividends to the government. All it's done is add to their debt.
So the thing is that yes, they have taken a lot of measures from time to time. I think all of them have not really resulted in the desirable I would say benefits or dividend for the sector as a whole, and of course to the government. Eventually they decided to recapitalize, and that's where the critical issue was, I think. As I said, in my overall estimate, it does still look like inadequate. So I think they will struggle to grow even in the next 2-3 years. And clearly, what I've learned, what we see is that even better capitalized banks in the private sector space are actually gaining market share, and that's where the growth is coming from. Largely, if you look at it, there has been substitution. There is a shift in even government accounts and government businesses have shifted to private lenders. Some of the private lenders are doing very aggressively out there. Good quality corporate account has actually shifted. And also with respect to the external borrowing, so that's also something that they are doing. So I think, and again within the retail space, there is a intense competition here. I think barring SBI, I think other PSU banks are not able to compete. So I think private lenders, including NBFCs, have been very aggressive out there. So clearly the market share for them has been falling, and I think there is a challenge also with respect to the deposit mobilization, the CASA, etc. Those are things that are getting eroded. So I think that is a setup that is laid out for the next few years.
Sure.
We'll have to see how it pans out. But I think measures that the government has taken hasn't really translated into the desired result as was expected.
Okay, I have one quick last question. If you look at the list of PCA banks today, who do you think stands to benefit from this capital infusion? Who do you think has the best chance of turning around quickly?
So as I said, the priority out here will be the PCA banks who are somewhat little lower than the limit, the outer limit of the PCA norm. So the attempt will be to push them beyond the PCA. So I think Allahabad Bank, Bank of India, OCB, and some of these banks, they might actually get sort of more attention. I would say, also, there will be other banks outside of PCA, something like PNB, Union Bank, Andhra Bank. These are the banks, we think, who are at the edge of slipping into the PCA where there might be some attention. So I think beyond this, I think the larger banks such as SBI and all, who are well capitalized, who can do business on their own, they will be tapping the market and they have already tapped the market. So I think they will not get the additional portion of recapitalization that the government is talking about.
Okay. Dhananjay, we'll leave it there. Thank you so much indeed for joining us with your perspective. Dhananjay Sinha from MK. Bharti Airtel has decided to form a committee to draw up a list of fundraising ideas, even as the country's oldest private telecom operator looks to avoid a ratings downgrade. The company also is transferring some of its stake in the tower business to its holding company, that's Nettle Infrastructure Investments. Samit Sarkar is here with the details of what this committee is expected to do and what are the options.
Well, the committee is expected to explore and evaluate various fundraising options that the company currently has so that they can strengthen their balance sheet going forward. But nothing conclusive has come out of the board meeting that was there yesterday, but then you can expect an announcement to come in going forward, because Airtel is now currently facing its first ever ratings downgrade. Now, the international rating agency, that is Moody's, has placed Airtel's long-term rating under review for downgrade, and that was because of company's inability to generate cash. Now, if you see, in the last 2 quarters, the company has been generating negative free cash flow. That is because of higher capital expenditure and lower pricing scenario seen in the telecom market. And if this continues for Airtel, then they might see cash crunch going forward, because if you see the company's scheduled debt repayments, that is close to 46,000 crore rupees in financial year 2019, which is nearly 2 times its annual average cash flow generated by the company in the last 10 years. And if you see the scheduled liabilities that are there for repayment, that is close to 74,000 crore rupees, that is nearly 3 times its annual average cash flow. So let's see what are the possible options that the company has, and they can see to generate more cash. So first is that stake sale in the DTH business. Second is they can sell that fiber assets. They can also look to dilute the equity. Then they also have the Africa listing option open, and lastly they also have the option open to sell their stake in the tower arm business, that is Bharti Infratel.
What about the stake transfer to Nettle, Samit?
So separately, Airtel has also transferred a major part of its stake in Bharti Infratel, that is close to 32% of its stake in its wholly owned subsidiary, that is Nettle Infrastructure. Now, Infratel has been a cash cow for Bharti Airtel since March 2017. They have been selling their stake in this company, and they have garnered close to 12,000 crore rupees so far from the stake sale. Now, if you see in March 2017, first they sold around 10% stake and they got close to 6,200 for that stake. Then they transferred close to 11% stake in Nettle Infrastructure, and then Nettle sold close to 8% stake in Bharti Infratel in 2 different tranches and garnered nearly 6,000 crore rupees from the stake sale. And now they have transferred close to 32% stake in Nettle. So Nettle Infrastructure is the Bharti Airtel's investment holding company, and in the past, if you see, Airtel has transferred stake in this company only to hive it off at a later stage. So you can expect some announcement coming in from Nettle Infrastructure that they might sell this stake. So let's see what Nettle Infrastructure currently holds with itself. So currently it has around 35.2% stake in Bharti Infratel, which is valued at close to 17,000 crore rupees. Also, it holds 29% stake in the DTH business, which is valued at close to 3,300 crore rupees.
All right, Samit, thanks so much for that. Technology stocks are under pressure despite the encouraging numbers reported by Accenture. The Europe-based technology giant posted earnings ahead of expectations. Accenture also raised its guidance for the full year. Agam Vakil standing by with the key takeaways.
Well, yes, as a matter of fact, when it comes to revenues, standing at around $10.6 billion, we have seen Accenture revenues come ahead of expectations, and it is the same for profitability, which stands at around $1.96 as far as its EPS is concerned for the first quarter, against expectations of around $1.85. Now, moving on, when it comes to its guidance, yes, it has revised its guidance, but that is the lower end of the range. However, this has had very little impact on Indian technology stocks, and this is largely on account of the kind of growth that they've seen in geographies. Now, if you consider North America, they've seen a growth of around 4.3%. Europe has grown 8.8% with very little change when it comes to its growth markets. What we need to understand is that this has been a continuation of a trend that we've seen for a whole host of these technology companies, including the large caps such as TCS, Infosys, as well as HCL Technologies, and that has not come in as a surprise. And because of the fact that the earnings are, well, just a tad ahead of expectations, we really aren't seeing too much of a reaction when it comes to some of these Indian tech stocks.
Agam, thank you for that. Let's talk about Infosys now. Infosys has named Bharti Airtel's long-time executive and global CFO Nilanjan Roy as its new CFO. Roy will succeed MD Ranganath, who resigned 4 months ago. He will take charge on the 1st of March 2019, when interim CFO Jayesh Singh Rajka will resume responsibility as its deputy.
Startups across the country are up in arms against the latest round of tax notices sent out by the income tax departments. It's forced the government to set up a committee comprising of experts from IIMs and IITs to look into the angel tax problem. But the income tax department maintains that such notices are sent out to determine the genuineness of the startup. Payaswini Upadhyay is here for more on this story. Payaswini, the details and what has transpired so far.
Okay, so let me first obviously start with what these notices sort of say. They're essentially sent to the startups under Section 56(2)(7)(b) of the Income Tax Act, which essentially says that if you are issuing shares to a resident at a consideration or at a price which exceeds your fair market value, that excess consideration will be treated as income from other sources and will be subject to tax at 30%. So let's say there is a face value of shares of 10 rupees which are issued at 100, and let's say in a couple of years there is a downward revision and you now then issue shares at 80. So in some cases the tax department is saying that this downward revision in valuation which you've done, so the first time when you issued at 100, this difference of 20 we are going to use as excess consideration and send a notice of 30% tax. Now this is a case of downward revision. There are also cases where the tax department has disregarded the DCF valuation which the startups have shared with the department, and said that in the first place itself you have overestimated your valuation and this excess consideration needs to be brought to tax. That's the one bucket of notices under Section 56. The second bucket of notices is under Section 142(1) of the Income Tax Act, where basically some of the notices of the assessment year 2016-17 will become now time barred in 2018 December, and which is why there is sort of an urgency to complete these assessments and these scrutinies, and which is why the department has sent these notices to get more information from the startups. And this information ranges from proving the genuineness of your investors, your sundry creditors, your ledgers of all creditors, etc., etc. Now, what's interesting is that we also spoke with two revenue officers in the Karnataka Income Tax Department, one former and one serving, to get the tax department's point of view. And we're not saying it's right or wrong, but here what it is. They've said that, look, Section 56 is an anti-abuse section, and it was introduced to basically, go after companies who accept cash in the garb of startups. The first point that they made is that the DIPP has put out a definition of startup, and once you qualify in that DIPP definition, no assessing officer, they claim, is sending notices to get information from these startups. That is the point number one. For the remaining universe of companies, they are saying that it's important for the department to investigate which startups are genuine and which are scrupulous, and then to argue that the department shouldn't even proceed to inquire in these matters is not fair. One of the serving income tax officers in the Karnataka Income Tax Department, he made a point that look, there are several cases where companies were set up to just accept cash, and in some cases there was a genuine business model, and in some cases there were well-known angel investors. So to argue that, okay, don't send notices if that an angel investor is well-known, the officer said that the reputation doesn't matter for the Income Tax Department, and they proceed on the basis that nobody is above law, and unless and until you finish your investigation, nothing is kosher. That is point one. On the point that why is the tax department, refusing to accept the valuation that these startups are presenting, the argument was that, look, the DCF method, which is broadly used, has three variables: cash flow, discounting factor, and terminal growth rate. And even if you slightly tweak any of these variables, the valuation can go up or down substantially. But if the assessing officer then accepts this valuation without applying his mind or without sending a notice to further question it, they could potentially be victim of a vigilance inquiry later on. So this is essentially the argument that the two tax officers told us. And they also made a point that why can't the government then introduce a substance test in Section 56 so that the assessing officer has some discretion that, look, if you are fulfilling criteria A, B, C, then you just close the file and you say that this deal is kosher. But until that substance test comes in, they were of the opinion them that their hands were tied with the law and they will have to apply the section to figure out which startups are genuine and which are not.
Interesting. That's the view of the taxman. Thanks, Paiswani, for putting that in context. Air passenger growth has slowed down for the second straight month in November. Higher airfares may have spoiled the party for airlines, which were hoping to capitalize on the Diwali holidays. Samit is here with some details.
Well, it was not a good month for the aviation sector, and we had pointed this out a week back when the ATF consumption growth was the lowest for the sector. Now, if you see, despite a lower base and a holiday month, the passenger growth was only 11% in the month of November, which was the slowest at least in the last 4 years. Now, this year Diwali was in November as against October last year. That's the reason the base was low, and usually passenger growth is higher in a festive season. Now, these signs of slower passenger growth during the holiday period would be a concern for the airline companies, as they have not only placed large aircraft orders, but were also expecting some benefits to come in because of the falling oil prices. Now, this slowdown in passenger growth could be because of the hike seen in the airfares during the month of November. Now, multiple reports had suggested that the airfares were higher in the month of November, and an analyst to whom we spoke to had suggested that the airfares were higher on an average by around 1,500 to 2,000 rupees compared to the second quarter. Now, if you see the company-wise passenger growth number, only Indigo and Air Asia's passenger growth were higher than the industry rate. Indigo's passenger growth was close to 21%. However, it was the slowest in the last 6 months. Air India's passenger growth declined by 0.4%, which is the first time it has declined since the last 18 months, while Jet Airways passenger growth, now that declined by nearly 7%, which is the highest declining rate seen by Jet Airways in at least the last 4 years. SpiceJet and Go Air's passenger growth were close to 10% and 9% in the month of November. Now, along with this, if you see the passenger load factor, that is the capacity utilization, of that also remained weak for all the major airline companies compared to last year due to higher capacity addition and lower passenger growth seen in the month of November. Now, it declined the most for Vistara and Indigo in the month of November compared to last year. Lastly, on the market share front, now if you see there, Indigo and Air Asia have continued to increase their market share at the cost of other airline companies. Indigo's market share stood at around 43% in the month of November, while that of Jet Group stood at around 14.3%, which is the lowest in at least the last 4 years.
So, thank you so much for that. Out of time on the show. Thank you so much for joining us today.
Lots more coming up at Bloomberg.